Global soft drinks and snacks giant PepsiCo out with quarterly results a short while ago. Earnings and revenue topping estimates. Company is also raising guidance and organic sales guidance. Joining us for more in a First on CNBC interview is Hugh Johnston, Vice Chairman and Chief Financial Officer of PepsiCo. We should mention that Hugh serves on our CNBC Global CFO Council. Always good to see you most quarters. Hugh, thanks for joining us.
Joe, great to be with you guys. Good morning. Obviously, we feel terrific about the quarter this morning.
Yeah, and we're trying to figure that out. The outperformance in organic revenues, so that you're backing out any inflation benefits from higher prices, and these gains are in unit sale. How does it work exactly? How much are you benefiting from the inflation that you're allowed to pass on in terms of higher prices?
Yeah, so we saw revenue growth of about 16%. That includes the higher prices. Volumes or units that we sell were up just a bit on the quarter. So passed along a bit of inflation. Obviously, our commodity costs are up even more. And as a result, gross margins were down a bit. But then we managed the balance of the cost structure pretty tightly. So operating margins were actually up about 30 basis points. So it's a combination of, look, we invested in our brands. We're actually seeing good consumer response despite the fact that we've had to increase prices. And we've got our cost structure under control very well. So we delivered a superior result.
Do you look at the beverage side of things as kind of the staid, slower grower side? And is it a lot of what we're seeing, is it in snacks, salty snacks, which I love so much, and Frito-Lay and Quaker, things like that?
It's really both. Frito had a remarkable quarter, one of the best I can remember in a long time. Revenue grew 20% in North America and for Frito. But at the same time, the Quaker business grew 16%. North America beverages grew about 13%. So it's pretty broad-based what's happening right now. We think they're all capable of growing at accelerated rates.
Geographically, I mean, you've got two kinds of diversity. You got all kinds of different snacks, all kinds of different beverages and foods, and then you're also, you're all over the place. So can you break down exactly, where are consumers doing the best?
Yeah, really, they're doing well in an awful lot of markets, and I'll give you a couple numbers to make the point. Internationally, we grew 16%, which obviously is a very good number, but we grew 16% in North America as well. So good balance there. Latin America, very strong. We grew over 20%. We're doing a great job executing the business down there, and frankly, the consumer still seems to be pretty healthy down there as well. Asia, Middle East, Africa, Asia Pacific all seem to be doing well. And frankly, even Europe continues to do pretty well, despite the obvious challenges. And in a lot of ways, Joe, I think what it comes down to is, look, in a world that's obviously stressed economically, as you guys have been talking about all morning, the one thing that consumers know is they may not be able to afford big-ticket items like houses and cars and personal technology, but they can afford a simple luxury like a bag of chips or a beverage. And frankly, it brings a smile to their face in what are challenging times. So that's kind of what's happening right now.
We definitely want to talk about all your new products, and Andrew wants to talk about some Sun Chips. I know that. I always talk about that stuff. And the holy grail of a protein snack that tastes like a greasy potato chip is still somewhere in the future. I understand that. I don't know what it's going to take. Look at the iPhone. I mean, you can't make a protein product that tastes like a greasy potato chip, but we have an iPhone that beams movies. I don't understand that, Hugh. So, let's ramp things up.
We're continuing to work on it, Joe.
No, but when you're trying to streamline the company, whether is it packaging, is it logistics, is it innovation in taste and product breadth? What all those things help you, deliver better results?
Yeah, when we're looking at costs, we really look at everything. I mean, the approach we've sort of adopted internally is, I don't want to call it zero-based budgeting, because that's a term that got abused a few years ago in the business world, but it's almost look at every cost and say, if I was starting over again, would I do that cost or wouldn't I? And as a result, we've actually gotten pretty good at cost control while we're growing the top line well. Part of that, candidly, is we're trying to prepare for what could be a tougher future from a consumer perspective, and if it is, we'll be ready for it. But frankly, if it's not, you'll see quarters like the one that we just posted where we're controlling cost and we're getting great top line. So we're trying to control what we can control in essence.